TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what else do we have? Okay. Well, volume's pretty good. Not as good as necessary. We're a little less than what we came down on. 4.7 billion shares as we start the show, which is generally fairly good. Means we're probably going to do 7.5, maybe 8 billion shares on the day. Now, this is where we're probably going to see 90% of all the fund money in by the end of the day. Doesn't mean we won't see some trickles or rivulets. I always like that, rivulets. I always like that that word. You don't get it, you get to use it. I'm trying to remember the last time I got to use it. Probably 10 years ago. Rivulets, fine little tiny rivers of water, tiny little things. But anyway, so we got that going on for us. Unfortunately, a lot of times this is as good as it gets. There we go. Probably, we got it there? Yeah. Turn it up a little bit so I can hear it in my headset. Probably, and I resoldered this last weekend. I resoldered it last weekend. It didn't do any good, apparently, and I can't get another one with a 90-degree elbow in it for some reason. But I'll try to solder it again this weekend. No, I can't just replace it. The long ones go into the keyboard. That's the problem. So I had to get this 90-degree elbow, and I soldered it. Maybe it's not a good 90-degree elbow connector, but I'll fix it. It worked for 3 years pretty well. It just needs to be resoldered. Anyway, what else do we have going on in here? Well, of course, we're up 55 points on the S&P cash. Dow 30's up 491. The Nasdaq's up 196. And this is, of course, all in the face of Google whiffing. Google itself is a little more over 4% of the entire stock market, to give you an idea. And of course, what do they do when one fails? They throw all the money into another one that can hold the market up. And what we're getting today is just that. And Apple up $10. But we shall see. Like I said, fund buying, this is the fourth. And this is kind of long in the tooth. Now, the one interesting thing that we have for a setup in this particular month is that it is a little bit longer for February. And that means that you basically have the expiration for the month on the 21st. So it's going to be interesting. We've got a little longer to go, a lot of time for monthly options to play out. But what that does is normally the first week or week and a half, we've got options delta neutral. We've got a whole nother week before we get to delta neutral. So we've got a little bit of time for the market to flip-flop around before we get a real good call it'll be a week from tomorrow. So kind of for the shortest month in the year, kind of one of the more interesting long months in the way that the options play out. So anyway, looking at a market that's up fairly strong, and the big thing is I think a number of companies starting to whiff on first quarter. I think this is going to be kind of like what was it, about 2016, 2015. We started seeing, when the Fed started pulling off, we started seeing light first quarters. My guess is that we're going to have a light first quarter again. That may even go into the second quarter. And at that point, we're going to probably start seeing the economies pick back up again. Of course, we're probably, if anybody was truly telling the truth, the Chinese problem over there with the virus is probably going to affect them by probably a point and a half of the GDP, and they were already slowing. So we could see, especially you see this in the Baltic Dry Index and just the price of steel and other stuff. So you know what? The question is, what happens? I think that as China continues to be weaker, what we're going to see is a stronger dollar. I think on this run, we could easily hit the 100 mark and maybe even go over it on the dollar. And that's going to put the kibosh. That's a technical term. It's in the big book of technical signals, kibosh, on it. It's also maybe in a foreign language book, too. So we'll look at that. But, you know, do you get maybe a little bit left tomorrow? You could be. But I think at least this may be as good as it gets for a little while. I don't think we'll go through the earnings calls today after the bell. There's not much really to move the market in the morning. So we'll see. The question is just how big is Disney? And probably, it certainly looks to me like it's a little bit bloated. We get a few more misses like we did on Google, and that should say a lot. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And as always, you can leave a message for me in the den. First question today was about Google. Not Google, Tesla. And I've talked about it a few times, but this is the way that you run a short squeeze. And I got it confirmed yesterday. And that is something that they did on Dries, which is the bulk dry shipper. And that is that if you're very smart, you got 10 people, they can buy up a lot of a company. They can put on the short squeeze of an extraordinary magnitude. You do that by taking shares out of your margin account and putting them into a non-margin account. That means you can't borrow against them, but that also means that no one can borrow them either, and those stocks have to be returned. So what happens is, and it's completely legal, in fact, I've seen big CEOs try to talk investors into moving their stock out of margin accounts, and that is just to run a short squeeze. So what we've had here is a couple little rounds of some operators trying to squeeze out the most of Tesla, and that is by pulling them in and out of these margin accounts. One day, like yesterday, you could have easily shorted in the morning, only to have to cover by the end of the day if you were short. And again, same thing earlier in the day. People make them available, and then they pull them out. And you can even do that intraday. I just haven't seen probably the equivalent of this back since late 1999. We'll be back in just a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
That it's all just a little bit of history repeating.
On this day in 1945, Franklin Delano Roosevelt, Prime Minister Winston Churchill, and Soviet leader Joseph Stalin, who is probably in some ways worse than Hitler, meet to discuss the Allied war effort against Germany and Japan and try to settle some nagging diplomatic issues. While a number of important agreements were reached at the conference, tensions over European issues, particularly the fate of Poland, foreshadowed the crumbling of the grand alliance that had developed between the United States, Great Britain, and the Soviet Union during World War II, and hinted at the Cold War to come. Of course, we had a sap for a president in Delano Roosevelt, and he basically gave away the store to people that he thought that couldn't be bad. You just kind of look at that, and you kind of know it's like the equivalent of heroin. It's not like you couldn't see it coming. Of course, he'd be dead soon enough. Ignoring threats don't do anything to get rid of them. Just because you're done with one and you're tired doesn't mean you can give up. And we did, and it caused, he still killed another 20 or 30 million of his own people in the next 10, 15 years. So what can you say? Soviet leader Joseph Stalin, socialist, communist. Eventually, that's where you get to because it always fails. Okay, what else do we have going out here? I did have something here that I wanted to show because I had a question about it, so I do want to get to it here. That is shorting ETFs. Someone asked me this. They were looking for the percentage of shorts in an ETF. They no longer publish those, and some ETFs are 200% shorted or 300%. And you would think, well, this is nuts, isn't it? Well, they just create shares. So again, when I'm talking about what's going on, this is kind of the stealth way to short the market. It does not show what happened. And probably the more interesting part of shorting ETFs is that there is no potential short squeeze on an individual stock. You may be wrong on the entire market, but if you are short some kind of ETF that had maybe Tesla in it, you may be on the wrong side of it, but its effect is probably going to be less than 5 or 4% on any ETF. So you can kind of mitigate the idea of being short a particular sector by shorting the ETF itself without the requisite issue of being squeezed by a particular stock in that. And that's appealed to many on the big street of men of the street anyway. And it's, like I said, not uncommon to see SMHs, a lot of these other things shorted 200 or 300%. But guess what? Since they're locked to the price of the underlying stocks, the chances of getting a big squeeze are fairly low. And they look at that as a benefit of a market that they can probably always get out of. There's always enough dogs in any ETF to make sure that it doesn't go to the moon or the other way. Okay, so let's get back to our charts, which are already in action. We're at 3304 on the S&P cash. Like I said, volume was pretty good. It's kind of tailed off at a little bit before 2 o'clock. We'll see how the last 30 minutes come. Let's look at what's coming out after the bell tonight. Allstate, kind of up on light volume going back to the 20th of December. This thing has not really had a decent volume day for a long time. And of course, pretty much this is a view of the markets itself, since most of what a insurance company does is take your cash, put it into investments, try to really get those investments to go up. If you have a claim, delay it, still getting those returns, and eventually, if a court tells them, to pay you off. But at the same way, these things go to heaven and hell with the market behind it, but a proxy for the market nonetheless. Boot Barn Holdings, the Boot Barn, one of these retail stocks. I don't see a lot in that one. Crown Holdings, yeah. This has been kind of hanging at its highs. Did have a good sign of breaking through, sign of strength back on October 17th. Did so with about 5 million shares, almost 6 million shares. It's just kind of been bouncing around up here. What you don't want is any close below about 75 bucks tomorrow. That would be a good sign that this is going to come back and eventually test the $65 level. CERN, which is CERN, has also kind of had this nice run up. It's been going down for a while. It popped above today, going into earnings after the bell. And again, anything below about 72 in the next couple of days, problematic. CMG, it has been kind of just toying around up at these levels. Last earnings call was not exciting at all. And you had a bit of a sell-off back to 728. Now you're back up to these highs again. You had no sign of strength. Could it still hit $1,000 before it turns? It could, but it's extremely thin for a stock up there. Disney, of course, popped a little higher today. Earnings out after the bell. You're right against resistance. I don't see anything that significantly changes what the last one did, which was a lot of promise for their streaming video service. And of course, since they really don't have anything to follow up, the Mandalorian from Star Wars. I wouldn't be surprised if they haven't seen a lot of cancellations. They've got one thing called the morning show, which I don't know, doesn't appeal to me. The only interesting part of it was the joke that Ricky Gervais made at the what was it, Golden Globes, whatever it was, about them lecturing people about doing the right thing. But other than that, not much. Now on the SMHs, you got a nice bounce today on no zip from KLA 10 core. Let's take a quick look at the SMHs, see if we got anything in that. The question is whether or not this is just a up move or a gap up in the downtrend. What you would have liked to seen is a significant close over the 3x3. You did not get that. As long as it stays underneath that, you're still in the ball game. So if you're short the SMHs, I think you got to just sit on your hands and wait for tomorrow. We're going to go to the break. Give me a call, 877-927-6648. I look forward to your call.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Okay, 3302 on the S&P cash, and you were hoping for about 9 billion shares. I think we're going to come in high sevens. It looks like right now. So a little light, and of course this is probably 90% of fund buying in today. So tomorrow we'll have to see what comes. Microchip, another one in the semi, same kind of thing. You bounced up a bit. You're still under the 3x3 on the downtrend. That still says that there's a possible weakness in it. Match Group, again, I'm not a fan of this stock. Eventually, I think the pendulum will turn against Tinder and Grinder and all those other ones that are Apparently, they all have to end in an eventually we're probably going to get something like AIDS, and that'll be the end of Match Group. MTCH is the symbol for it. And you really haven't had any volume going back to the 19th of December on it, up or down. But, what can you say? NBIX, also after the bell tonight, Neurocrine Biosciences, a little pop. I think we got a couple of biotechs in the morning, but those are, of course, very hard to figure out. Snap, also after the bell. It's been holding 18 fairly well after the top. You really didn't get a lot of sell-off. The only thing is you don't really have a clue other than the fact that this thing's been going sideways for about 10 days. And that generally makes me think of distribution at highs, but very tough to see. Of course, also after the bell tonight, we've got Seagate. It popped and rolled a bit back lower. Even though we've had some nice moves higher in the traditional or legacy hard drive manufacturers, it's very hard for me to see over time whether these guys have the ability to change enough, because basically they're just turning into memory companies. And that eventually is going to be the end of Seagate, Western Digital, Toshiba, all the other traditional ones. Now we got a bunch of questions in the den I wanted to get to. Let's see what they're up here. Microsoft, if you have any knowledge to speculate how getting into 5Gs with a Dell AT&T for U.S. government could be? No, not really. If you missed the news, basically the president talked about a bunch of U.S. companies getting in to 5G to replace Huawei for all your hacking needs. Don't let them hack us. Let U.S. companies hack us. But anyway, I think there was a lot going on in there. When will short interest be reported regarding Tesla? What happens is twice a month you get a review or an audit, let me put it that way, of how many short shares were done on the last day around the 15th and the last day around the 31st of the month. It's bi-monthly. But you don't get that data for at least another 10 days. And the people inside the stock market willing to pay $3,500 get it a couple of days before you. So generally what you want to look at is somewhere around 11, 12, maybe even 13 days after the close of the month, you will get it. So you're really, truly driving in the rearview mirror looking at old data for short selling. But yeah, it's darn near 2 weeks old by the time you get it. And you should use that accordingly. Generally, they don't change that, or let me put it that way. Historically, in the past, short interest did not change that much. They used to just report it once a month. But to me now, the more interesting part of that is taking a look and see what the daily numbers from FINRA tell us about shorting. and then try to put that together each bi-monthly and see how the stock acted when people shorted it. One of the things that has me kind of scratching my chin a little bit, and I've said it for years, has been to really be worried when shorts quit shorting. And yesterday we didn't have a lot. I'm starting to see kind of that same trend today, that we don't have a lot of shorting going on in the market, and that is problematic. Question about, do I see anything new in Apple? No, it just seemed to me like everybody decided it was time to be up, so they pushed it. And again, Apple really is held fairly tightly. About 80% of the shares are in some level of an ETF or a fund. They're not actively held by individual consumers. They're in the one of the ETFs, or technology ETF, and a pop or a drop in Apple really is marginal, and you never know how much of it is them actually buying their own shares back to get people off their back being short. What else do we have here? Okay. Question. Boeing. I'm not going. Did I? Hopefully I got that. Oh, I did have another question here. Thought we had. Or Lyft, Uber to extend rallies as you see it? I don't know. I'm not a big fan of them. Let's do Boeing here. I think you're starting to see at least the level of consolidation that you would want in Boeing, but you're probably going to need, I'm going to say 10, 15 days if somebody's down here accumulating it at about the 318 level. But yeah, you're probably going to get at least 5 days more. I'd probably look at this into expiration week, especially if people start hopping on that short. But going sideways, yeah, pretty good. Down at lows, generally a fairly good sign of accumulation, not distribution. And of course, Uber. I'm not a fan of any of these lifting companies, other than the fact that these things are probably going to offer another opportunity to short at around $40 where this gap continues. Now you got down to 25.58, you're back up. I mean, it was a nice run out here, but this is exactly the kind of thing you want to look for. Any close in the next couple of days below about $38 on Uber would be a double repo and would take you back to $29. That's not a forecast. You've got two opportunities. One, it pulls back a little bit and fails. Two, the one I kind of like the better is a short at somewhere around $42. I don't think anything's gotten any better for these guys. Probably worse. Uber and LYFT, right? Okay. Well, certainly Lyft didn't blow up as badly lately. Up to the previous high of November 26th on half the volume so far today. So this one's kind of looking more of a trend or in a range than maybe Uber, which could be short. We'll be back after this.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And CrowdStrike question, can it go to 71? And the answer would be yes. I would say 71 I don't get. 69.70 would be more likely. I dislike being long CrowdStrike because it has a huge political risk attached to it. Them darn Russians are everywhere. And of course, big component in the Ukraine for CrowdStrike. They also have probably some skeletons in the closet about what's going on in them. I think it's a risky bet. Of course, I don't know if it's tongue-in-cheek, but the rumor's always been that they've got all those 30,000 emails from Hillary. It's probably not untrue, but I don't know if it is true. It's one of those things. But there's always the opportunity, and why it came off of 101 is now in the mid-60s is not mostly because of business. It is that political risk associated with it. I don't know how to play it, and you always wonder whether or not you're going to wake up one day and see the feds have a lawsuit against CrowdStrike for a variety of things, but from Russian entanglements, and I mean, I'm not talking fake Russian meddling. I'm talking real mobster kind of Russians in the background. That's always been the rumor, and it's been going on long enough that I have no inside knowledge, but I would always be very wary about it. Who doesn't have Hillary's emails? Well, that's pretty funny. Mum's the word. Okay, from probably from a jail cell. I don't know. Political risks, I stay away from them because generally the insiders, like senators, can't be sued for insider trading, and a lot of times they know about this stuff. They'll run the stock up and then get out, and then the next day they'll, be short. It's just, I would say that there are better stocks to be in. That have less political risk. Okay, question about the V and Q. I kind of look at it as a canary in the coal mine. It has bounced a little higher here, but this is exactly the kind of pattern that I worry about, and that is a handful of days leading up that are pretty perfect, a couple of days below 3x3, and then a close above it, and then the next close below it. Now, the reason that I get into to that is the TLT tends to lead the VNQ, and we've kind of already got the downside on the TLT today. Any little close above and then close below on the TLT would suggest that you come right back down to about 136 on the TLT. So are you doing it? It's not a projection until you go above it and then go back below it. And then you probably have an 80% chance of going right back down to the previous low. And this would just be a huge trading range in the TLT from 146 back to 135 or 136. Although if it came back this time, you'd have to wonder whether it actually breaks that 136 at the low. Again, not a prediction. We've got a few days to go to confirm. I'm just got the little hairs on the back of my neck standing up a little bit on this bounce. Okay, what else do we have? Check the email again. Okay. Two questions. Okay, looked at Apple. Got Netflix. Okay, so you jumped above the gap on Netflix with no volume. My guess is these guys are thinking that Disney does well and they're going up. If Disney misses, I would probably short Netflix in the after hours. That would be the way I would look at it. Again, they get a lot of, this is kind of traditionally the strongest part of the year for Netflix because, of course, they get to crow about how many movies that they had that won Oscars. They're fighting with the Oscar folks right now about what movies are and can't win. I haven't read lately about what that's about, but you broke above it. You've got literally no volume today, 4.43 million shares. And this is in the comparison to the 31.3 million shares down on 718. It's kind of come back up here. You've had your move, but to me, I would much rather be selling Netflix here than buying it. But again, Disney tonight probably going to be the determining factor whether Netflix goes higher. I don't think there's any reason to get in front of this, but after hours trading may not be a bad idea if Disney whiffs like Google did. Other members of the apocalypse, we already did Apple. We haven't looked at Microsoft today, MSFT. Nice little pop on them again. It's getting pretty rarefied air even for Microsoft, but some good news, upgrades, everybody talking about it. And, of course, the president talking about Microsoft leading a consortium to go against Huawei in 5G infrastructure business. I don't know how far that's going to go for Microsoft. I have a feeling that they're basically talking about Microsoft for their cloud services to back everything up and not them really building any hardware. But who knows? Okay, so we got Microsoft, Amazon. Oh, we haven't looked at Amazon today. You bounced really hard. You've had the volume. You came back up to the highs today. I just think that you get about 1950. That would come back to fill this gap. Of course, Amazon's seasonally strong with Christmas sales. But that's kind of over, and they're really kind of light until midsummer, and then probably looking for another big rally next fall. But I don't know. I'd much rather probably right today. I mean, you got to. It's not that I know that they're going down. It's just a lot of these stocks are right at the level. They don't have a lot of volume, and if you're wrong, you can have very tight stops and know fairly quickly at these levels today. Okay, what else do we have? Okay, just going through these emails. Okay, platinum opportunity. Been a long week. Okay. I got a lot of emails here, but none of them have to do with the show. I'll answer them after the show. Okay, monitors, done. Okay, quick question about monitors. And I'm not going to say I'll be able to answer it all, but when we come back, I'll give you at least a couple of pointers if you're looking for monitors to trade with and what your options are. So you at least need to look, but man, it's a can of worms. So we'll be back with you.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride a next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a quick question about monitors for trading, and it all depends on what you're looking for. There are 3 different kinds of monitor panels. Those are from the manufacturers. Some are cheap. Some, when there's a lot of movement, smear. Those generally are the kind that people want to use for desktop publishing, but not playing games. Then there's ones that have very high ability to have very high frame rates for games, things that are moving. And then, of course, you've got ones that are visible from just about any angle. Some that only sitting right in front of them, that they look very bright. So the question is, are you talking about monitors that many people can look at or that you can look at, but don't have to be smack dab straight in front of it to see? So a lot of moving pieces in there, but you'll see on all the reviews, people say that it's this kind of panel or that kind of panel. But the idea is to start off with what you need first. Beautiful color generally comes at a price, and that's the speed that the screen can update. So generally those tend to be very good monitors. And if you want speed, then you're talking about $600. If you're not talking about speed, then you can get a fairly decent one for $250, maybe $300. And of course, if you're talking about true colors that you could use in pre-press or video editing, that's yet another whole bag of worms. So when you get to looking at the monitors, read the reviews, but understand that you are looking for something: speed, color saturation, color trueness. And of course, if you're playing games on it, that is yet another factor. But just look through all those. But those are the things you want to look at. In the meantime, sell when you can, not when you have to. And we will be here tomorrow. Same bat channel, same bat time.